Good morning, everyone. Thank you for joining us on this webinar. Good morning from the south of Germany. We are very delighted to welcome all of you to our online event on refinancing possibilities from government-supported export credits. Alongside myself, I'm supported by Jan Bla, project manager at KfW, and Andreas Gehring, product and innovation manager and our top expert on refinancing possibilities supported by the Export Credit Agency. My name is Felix Brücher. I'm the head of department market and commercial underwriting, and I will guide you through today's webinar. A few technical remarks I would like to add. You can always ask questions using our chat function. We will address these questions in our roundup session starting hopefully at 10:45. So feel free to ask questions concerning our products and all other topics that may interest you. But let me first start with a general overview. What is the aim or the goal of export credit guarantees in Germany? We can of course look at that from three dimensions. First of all, the federal government has the goal to support German exporters, especially and foremost in emerging markets. This is being done through a wide range of supporting mechanisms. One of them is, of course, Hermes cover, and we are in this business for more than 70 years. Our session today, of course, is populated by banks and exporters, and your aim, your reason why you use these credit guarantees is, of course, to securely finance goods and services to emerging markets with the support of the federal government. But let's also keep in mind the foreign buyers. They want to acquire German goods and services reliably on credit terms, and by providing financing opportunities, you can increase your customer base substantially, and therefore Hermes cover is one of the key elements for your success abroad. In our today's webinar, of course, we will look at refinancing options and how the federal government with its partners can support you there. But let me have a quick look at last year's figures. When we did this seminar in German, we were not able to communicate the results of last year's business just yet. But now I'm happy and delighted to share them with you. We have seen a somewhat significant drop in the overall volume that we were able to support, of around about 20%, and we ended up supporting 16.7 billion euro of turnover during the year of the Corona crisis. Having said that, we were able to increase our customer base by more than 30%, which is an indication of the importance of the instrument going forward, and also a good hint of what is yet to come, especially in a post-corona time. Round about 80% of our volume is business which we do with developing countries, and overall the federal government ensured business in more than 160 countries. But let's come back to our today's subject. We have seen over the last 14-15 months that the federal government is more than willing to support exporters during the coronavirus crisis. The COVID pandemic has not led to any cancellation or restriction of existing cover. We were actually able to extend the export credit guarantees to the so-called marketable risks. These are the risks which are usually not being served from a government side, but from the private market. And therefore, we are in a position to provide sufficient funds in order to cover supplies and services from Germany, especially to the developing countries, but as I said, also to European Union customers of yours or customers from other industrialized countries. So if you have any questions there, please also feel free to contact us. One of the key components of the export strengthening package has been the so-called 5-point package. This 5-point package has different dimensions, and we will focus, of course, today on the improvements around the refinancing options. But I will just quickly indicate what we also did. We improved the conditions for new exports. We created a new product which is called the shopping line cover, which gives you the opportunity to bundle different suppliers under one shopping line cover, and this gives us the opportunity to especially discuss with large buyers from developing countries under one cover. Thirdly, we were able to agree on certain premium adjustments, and the fifth point are further technical improvements, which give us the opportunity to serve our clients even better. But today, as I said, we will look at the improved refinancing options that we provide to our banking customers, and Andreas will give you a quick overview of these instruments in order to set the scene, and then Jörn will explain how KfW is providing these services to you. Over to you, Andreas. Thank you very much.
Okay, thanks a lot, Felix. Hello, everybody from Hamburg. It's a pleasure to have you here on this online event to have a deeper look inside the refinancing possibilities the German government offers within Hermes cover. First of all, I would like to give you a short overview on the general structure. What is the idea when having those refinancing products? First of all, you have the buyer credit cover. This is the basic product. Having this product, we will have the general analysis. We have the general cover for the project. In certain cases, it might also be others guarantee, but in most of the cases, we see buyer credit cover. But we have learned from the market that to get access to funding sources, it's not sufficient to have only buyer credit cover, but it's necessary to have certain additional packages, certain additional types of cover. The German government has introduced 4 different types of additional cover, depending on the source where the funding comes from. Today and at the beginning of the further discussions, we will have the KfW Refinancing Programme. The German government provides every year 1.5 billion euro to grant funding from KfW Group, and this is very helpful to enable KfW Group to make use of Hermes cover. We add a specific type of securitization guarantee. We have recently modified and improved this product, and the German government, based on a decision of the European Commission, had decided that this solution will now be offered permanently, and this is a very strong signal to grant you the security you need with regard to refinancing. Let's have a look to the next possibility, covered bond, a very specific solution. Is a solution the refinance this a certain fund brief license, a license for covered bonds, and only specific banks having this license can offer this product. What have we done? First of all, we have buyer credit cover, and we have certain amendment adding this by a specific covered bond guarantee. Let me come to number 3, the securitization guarantee, a solution the German government offers for more than 40 years. Today, this is a solution for external refinancing. You will receive, by the assistance of securitization guarantee, access to external sources on the capital market, like pension funds. In the crisis, we have learned that this specific traditional type of securitization guarantee is not sufficient for all cases. Therefore, the German government has decided to introduce a new specification of a new type of securitization guarantee, the securitization guarantee for refinancing. The refinancing securitization guarantee gives access to the sources of covered bond banks. So that means in case you as a bank do not have a covered bond license, you have the possibility, by using this specific securitization guarantee, to have access to a bank having such a covered bond license, and therefore you also can make use of the very strong reputation of German Pfandbrief. This is the basic idea of the model, how the German government will support you by banks in order to have sufficient and good refinancing products. We will now switch over to Frankfurt. I will hand over to my colleague Jürgen Glaff from KfW Group, and he will give us a more detailed insight in that's what's going on with refinancing from KfW Group. So I will hand over to you, Jörn.
Yeah, thank you, Andreas. Thank you, Felix. Welcome not from the south, not from the north, but from the middle end of Germany, from Frankfurt. Thanks for the invitation to Euler Hermes to this webinar to have the opportunity to speak about the achievement what we reached in the last year and the outlook of the program covered refinancing of the KfW. I had a short glimpse of the list of participants. I've seen some well-known names, so welcome to them. But I've seen also a lot of new names, new banks all over Europe, so welcome to them as well. I would like to split my little excursus about the KfW program into two parts. One part is what we did in the evaluation together with the government and the EU last year, and what are the outcomes of that. And in the second part, I will flip through the presentation and give some more details to the presentation and to the work we're doing with the KfW program. So, like Andreas said, we did the evaluation last year, and some of you I've seen in the list are working with us. Some banks, we sent some questions to the banks and got some answers from you and some suggestions how to bring the program more forward. Thanks for that. We discussed these questions and we discussed the whole program with the Ministry of Economics in Germany and with the EU Commission as well. The discussions have been productive, and in my point of view, we achieved some really good results. One result is, Andreas already mentioned it, that there's no termination date in the program anymore. So the program is now unlimited, but what gives you as the banks more security to see how you can longer term projects. There's no duration of the program of this 5 years anymore. What we discussed and what we achieved with the Ministry of Economics is that we as well doing an evaluation of the program every 5 years. So you as the banks will get the questions from us in the next 5 years as well. But there's no needed okay from the EU Commission or from the government of Germany anymore to go further with the program. When we do the evaluation in 5 years, it doesn't mean that we just are fine with input from your side. What depends on issues, what we can do better in the program regarding all stuff of digitalization, documentation. So feel free to give us always your ideas, even it's not evaluation time. In my eyes, the most important achievement is the loss of the state aid check, which made the program in the last year, so since the program started, complicated and not so efficient. The state aid check regarding the ultimate borrower is now gone. It's not anymore part of the program, and all this, what is regarding to this, the minimum margin, the private investor test, and all this stuff is not needed anymore. Important to say is we're not doing no state aid, but we're doing a state aid test and a state aid check with the margin and the interest we are quoting to you. And we do that internally, and this is approved from the EU Commission as well. And so we are well in the frame of the state aid checking within, but we don't do the double check we did in the last years anymore. We discussed other topics with the EU and the ministry as well. So one of the topic was, and that was an input from the banking side as well, is can we do the program within EU country? We discussed that, but at the end, especially the EU Commission are not very keen of that, and we cannot do the program within EU countries. So it's just a program for countries outside of the EU. So one big country comes to these countries as well. So Great Britain, we are keen to see some projects in Great Britain. We have seen no so far, but hopefully they'll come in the next couple of months or next couple of years. Andreas already mentioned, I don't want to give it too much time, is the highlighted program in the 5-point measuring plans against the COVID-19 pandemic. We are also within that, and with all these kinds Andreas mentioned before, shopping line, etc. So this is what we did last year, what we achieved. So now I would like to go through our presentation. So could you please give me the next slide? I don't know, is it Andreas or is it Felix who is doing the slides? Yes, so what's the program objective? As you know, or what we want to achieve is the planning security for banks and exporters as well. Especially in long-term export projects, we know all that these projects are not done within 3 months, but they always need a longer term to establish them and to get refinancing on them. So we will give you a planning security. As you all know, there are a lot of other countries doing programs like the KfW program as well, and offsetting this disadvantages we want to have, or the German government tries to give with the KfW program a level playing field for all players in Europe and in the worldwide market. Next slide, please. So the program design is like Andreas mentioned. We need a Hermes covered export credit. We need an additional export guarantee from the federal government, the securitization guarantee. And what we need as a bank is an assignment of your credit claim against the ultimate borrower. The advantage, congruent maturity, is we can do the long term, which was not so easier for some banks to get in the past. Strong reliability and flexibility, what means disbursements and repayments along the line of the export credit. We are, in terms of reference rate, we can do fixed and floating, of course, and we also can do a one-time switch option, fixed interest into floating. We can cover a broad range of currencies as well if they are not too exotic. So you as a bank, don't hesitate to give us a quotation or a call, even it's a foreign currency, even it's not US dollar or euro. We can try to get this through our treasury. Sometimes it's easier, sometimes it's a little bit harder because we have to do a hedge on that, and we have sometimes a little bit trouble to get the amount of the currency or get a hedging partner. But don't hesitate to give us a call and to speak with us about the currency you would like to do the export credit in. And yes, thank you. So now we see the program design in a more picture-like. If we go from the center point and from the bank as a center point of the project, we see on the right-hand side it's more the active side with the borrower who gets the loan from you as the bank, who is buying some German goods and making the export contract with the German exporter. And on the left hand and on the downer side, it's the passive side of the bank, giving the refinancing we do as the KfW and the assignment agreement and the securitization coming from the Euler Hermes, the federal government side. Thanks. Next. So the general details of the program, like I said, the program period is now unlimited and not a 5-year terms anymore. We are pretty happy with that. Eligibility: every bank who has access to the credit cover or the Airbus guarantee of the federal government. This comes over the Euler Hermes side. Borrower, like I said, must be outside the US, outside the EU, and we can do buyer credits or bank-to-bank credits as well. All ECA covered. We need the confirmation of the federal government. The credits should be no older than 6 months. So this is one part we also discussed, but the program is designed and still designed to refinance new deals and pushing new export deals of the German economics. So we still go no older than 6 months is the age of the credit. Means in the doing, we will come to that on a later slide, but means for the doing that what I say, always give us a call at the earliest possible times. So the maturity should be bigger, longer than 2 years. This we also achieved. It was in the past, it was 3 years. Now it's just 2 years. Makes it more convenient for you as a bank, even when there are shorter terms. Contract currency, that's what I said the slide before. We can do all kind of currencies if they are not too exotic. The conditions are 2 components: the margins and the commitment fee. The margin is depending on the structure of the project, disbursement, repayment schedule. We will need to see that, and then we can give you on a daily basis a margin. The final fixing comes when the contract is concluded. So we can do no margin or something like that in a forward state. Commitment fee is same thing, is coming when the contract is concluded. So how is the procedure to get a margin, to get a deal from our side? We will require some data from your side to get the quotation ready for you. So we need the volume and the currency, of course. We need the disbursement and the repayment plan, as well as at this stage of the project. We are absolutely fine when you send us a quotation question where stays we are calculating with a 2-year disbursement and a 10-year repayment, and then we can calculate that, and can you give you a margin on that. We don't need the exact disbursement and the exact repayment plan in an earlier stage. The reference rate, of course, is important if you go for 6 months or 3 months Euribor or LIBOR or something like that. Fixed or floating interest rate, and then we can go forward. The additional data, name of the ultimate borrower and domicile of the ultimate borrower, is important for us to see all the criteria of the program are fulfilled. So I already mentioned it must be outside the EU, and as in an early stage, as far as it would be good to hear the name of the ultimate borrower. These are because of compliance issues. So we starting to check the compliance issues at the most earliest point. We see that the compliance issues are getting more and more important in this kind of environment. So we're really happy when you can give us some compliance infos at a really early stage, so we can start discussing with you, and you can start discussing with the ultimate borrower if we need some further information regarding tax, regarding the organization structure, the shareholder structure of the ultimate borrower, or of the bank when we do a bank-to-bank credit. Thanks for that. Yeah, I just mentioned some things from in the earlier slide. Yeah, we need when we're getting nearer to the deal, we will need, of course, the export credit agreement between you and the ultimate borrower. We need the covers from Euler Hermes, the final commitments. Then we, as the KfW, starting to draw up the contracts for the refinancing deal. We also do the timely basis with Euler Hermes when we do when can we do the signing date and all that. Third step, conclusion, when we have a signing date together with Euler Hermes, together with you at the bank, we do a final check of the program. You will get an email or a call from our side, and we will give you the final margin, and hopefully you say okay for the final margin, and then we do the signing sorry, the signing process on this day. As I said, we can do no forward or something like that, and it must be all done in one day. At least the refinancing deal must be in one day. We can do the securitization stuff with Euler Hermes. We can split that and can do this some days later as well. Thank you. Refinancing process, like I said, all what I said now, again on a timeline. Non-binding refinancing inquiry of the bank. That's how it starts. No binding offers from our side, so don't hesitate to question some indications at an early state. We see in the past that before we have a conclusion of a deal, we've seen 3 to 5 indication quotation questions from the banks. Getting closer to the conclusion of the deal, and that's absolutely fine for us. So don't hesitate to give us an refinancing inquiry of the bank. As I said in the slide before, when we come to the later stages, the bank presents the documents we need, and the final check of the program criteria and the signing of the program agreements is the last step on the timeline as well. Yeah. Thank you. Oh, okay. Oh, it's we are already through it. Yeah. Thanks for your time. Like I said, don't hesitate to give me or my colleagues, Doreen or Florian, a call. We are the project manager of the program, and we are always keen to answer all your questions and to preparing some indications regarding the KfW program. So thanks for you.
Thank you very much, Jörn, for these insights, and we will hand back to Andreas. As I stated before, you can ask questions in the chat function. Jörn, Andreas, and myself will be more than happy to answer them. All right, and with that having said, over to Andreas.
Okay, thanks a lot. I will continue and will give some insight first of all into the view from Euler Hermes, some additional information, and then I will come to the forthcoming further refinancing products. We would like to add that we have the possibility since 4-5 months ago to have online access for the securitization guarantee for the KfW refinancing scheme. So as you know it possibly already from buyer credit cover, now you also have the possibility to make the application online. It's a very convenient way where you have all the details in one system, and it's very easy to handle with a lot of information. In case you do it for the first time, you will find all the details, but in case you have some more experience, you can copy the details from further deals and just fill in the relevant information from the very specific deal you have when making the application. We will go to the next slide. Felix, please. I will give you an insight into further information possibilities. We from Euler Hermes have prepared some information on the securitization guarantee for the KfW program. We will inform you in a general way on the solutions the German government has implemented within the 5-point package of measures. And of course, we in Hamburg or in the region, we will give you the advice you need for Hermes cover. I would like to hint at a further planned information event. We will inform you in September on our specific view from Singapore. We have for some years, we have a representative office, a person giving you advice and assistance locally in Singapore for the Southeast Asian region. So join also the September event to get more insight from the regional market, Southeast Asia. In order to have a more detailed look in all the technical details regarding KfW refinancing program, there's a very specific informational leaflet from KfW. We have provided for you the relevant link. So number one of the refinancing products has been the securitization guarantee for the KfW program, but the German government also offers a variety of further very specific solutions. I will give you an insight on covered bond guarantee. A guarantee we have introduced in the year 2017. We have developed this product in very close cooperation with the Federal Financial Supervisory Authority, BaFin. So we had very intense discussion what is necessary for BaFin to have the necessary solutions in case you are intending to make use from the covered bond, German Pfandbrief, and in case you intend to use Hermes cover for those covered bonds. First of all, you have buyer credit cover, but it's all possible for untied loan guarantees and Airbus guarantee. And then you will have some additional solution by covered bond guarantee, but it's not like securitization guarantee, but by law, it's an insurance product. So it's a very specific risk we will add. This risk will be secured, and it's a risk that the seizure or and the withdrawal from the cover funds in connection with a non-European debtor in the event of the insolvency of a covered bond bank. So this is a very specific risk, and for this very specific risk, you will get additional cover. And as it's a very specific risk, there is only very small additional premium, 5 per mil of the premium for the principal cover. So let me say you have a premium for buyer credit cover. This will be the basis, and then you will add 5 per mil on this very specific premium. Generally speaking, and we will keep on the last slide, the general conditions of buyer credit cover will apply, and also the uninsured percentage will be the same. So it will be a 95% cover, as you know it from buyer credit cover. What is the legal framework, and what is the basis for the discussions we had with BaFin? It's the Covered Bond Act, and in section 20, item 2A of Covered Bond Act, there is a certain threshold. That means if a bank will refinance credit receivables from debtors outside Europe, you have a very specific limit, a threshold of, in most cases, 10%. And this, of course, might be a limitation. And having this additional covered bond guarantee, this threshold will no more be a limitation for you. Therefore, it's very helpful. What exactly is the risk the legislator sees? It's a theoretical risk that the credit receivables may be withdrawn from the cover funds, from the covered bond, through being seized by a creditor outside Europe, or in any other way, if the German covered bond bank or the European covered bond bank becomes insolvent. So insolvency or bankruptcy is the basis, and only then it will apply, and the rest of the transaction will then be covered by buyer credit. And how can this covered bond guarantee help? As I mentioned before, a higher proportion of the credit receivables from non-European debtors can be refinanced. So the threshold of 10% will no more be valid. So this will give you a better flexibility by making use of a covered bond guarantee. And after introduction of this very specific covered bond guarantee, we see a very strong demand from the market. For example, last year we had 3.6 billion new coverage. So it's a very strong signal that this is a very helpful solution for the market. And we also have seen certain switch from the former securitization guarantee, which existed in former times only, as we in those days we did not have a fund brief covered bond guarantee. So knowing that the specific risk will be covered, people and banks switched over to this very strong solution. But let me switch over to the traditional securitization guarantee. This had been the starting point for the German government when they detected the refinancing possibilities and had the wish to enhance the refinancing possibilities. In a former version, it had been introduced already 1978, and then since this time we continuously improved this type of cover. What is the application scope today? It's external refinancing of a covered export loan. So maybe from a German pension funds or other sources. Sometimes it might be helpful to get in touch just to clarify whether certain refinancing sources will be suitable. So get in touch with us to have deeper insight for your very specific case. You also have the buyer credit cover as the basis, and then it will be enhanced. It will be enhanced in that way that you have a 100% guarantee towards the refinancing institution. So you won't have any more waiting periods. You won't have a 95% cover, but a 100% guarantees. So it's really an unconditional claim to indemnification, but only with regard to the refinancing institution. So you will be in the position to attract those refinancing institutions. The refinancing institution will have the full support of a 100% guarantee from the German government. But for the normal business, for the export transaction you have covered for your exporter, it will still be a 95% credit cover. So that will be the basis, but you have the strong support by a very attractive refinancing source from the external market. But we have learned, especially in the COVID-19 pandemic, that that's not enough for all specific cases, and therefore we have introduced a new type of securitization guarantee, and the securitization guarantee R, as we call it. In this very specific type, the receivables resulting from the refinancing loan will be the objective of cover, and that's a difference regarding the traditional type of securitization guarantee. And this is very helpful for one very specific case. We have certain banks that do not have a license for covered bond, and this is a very complex procedure. You have to apply, you have some analysis, but certain banks do not have this license for covered bonds, but they have the wish to have the very strong refinancing from German Pfandbrief, from the German covered bonds. Therefore, by help of this very specific securitization guarantee, those banks can make use of the Pfandbrief license, the covered bond license, from banks having such a license. So the refinancing will come from a bank with such a license, and therefore indirectly those banks will have access to the very strong German Pfandbrief. So the very attractive new instrument, it's not limited in time, so get in touch with us to have some more details and to have more insight whether this product, this fourth solution regarding the refinancing, can be a solution for your very specific case. So this is the idea we have regarding the refinancing solutions offered by the German government, but we also improve our products continuously, and also from some technical items to give more clarity to the users. Let me have insight in some additional adjustment we introduced recently regarding securitization guarantee. This means for the traditional securitization guarantee and for the securitization guarantee for the refinancing loans. First of all, you nowadays have a better flexibility. The date of entry into force for this product can be provided on a request. You have the choice whether you need immediate cover or only starting on a specific date. That's very helpful to give you more flexibility, and this also will have some impact on the relevant time when the premium has to be paid. Moreover, we added some new regulation in the contract for the provision of a guarantee. So we clarified that the export loan agreement and the refinancing agreement must be drawn up with matching terms, and especially in case you have some amendments, you have to make those amendments in both versions, in the export loan agreement and in the refinancing agreement. I think that's a very good sign to have some more clarity with regarding the technical details. On the next slide, we see that there had been some further clarification. We stated that the risk of seizure by creditors of the refinancing institution is not covered by the guarantee. We know this very specific type from covered bond guarantee, Pfandbrief Deckung, but regarding the traditional securitization guarantee, it's not integrated, it's not necessary, but for certain reasons of clarification, I think it's quite helpful to have this in the documents. It is very helpful also regarding the assignment. You have to know that there is no automatic subrogation. So in the case of the event of an indemnification under the securitization guarantee, the refinancing institution must assign the claim to repayment of the export loan to the German government. I think this is also clarification how to handle this. And at the last point, we also made a certain quantification of the maximum amount of liability. Having the buyer credit cover, you have cover of 95%, and having securitization guarantee, you have additional security 100% towards the refinancing institution, and this gives a clarity towards the exact quantification, which is also then very helpful to have this in the documents. So that's the presentation, the corresponding element. You see all the details for the refinancing solution of the government. We think that especially the strong AAA rating of the government will enable you to find suitable solutions to refinance the export transaction. And especially on those volatile times, I think it's a very strong signal that nowadays you have a very attractive mix of those suitable product solutions. And please feel free to get in touch with us. Contact KfW in Frankfurt, contact the people in the region, and contact us in Hamburg and the head office of Hermes. Thank you for your interest, and I will hand over to my colleague Felix. Thanks a lot.
Thank you very much, Andreas, for these insights into these different possibilities. So we have a few questions already coming in. We will not be able to answer them all in order to keep the time frame just a little bit. If one of the questions was how we looked 10 years ago, we answered this question by this slide. But seriously, we have one question regarding the regional exposure that KfW sees through this product. So, Jörn, which markets, which export markets do you see often, and do you see any change due to the COVID pandemic?
So the last question first, and I cannot see any change through the COVID-19 pandemic. There's no switch, and as you said in the slides at the beginning, we've seen no down curve, of course, because of the pandemic. We see a strongly needing of the refinancing program in these times. And what we see in the market is that we see more Africa in the last couple of months. Africa is coming, and we are, as KfW Group, we are pretty happy with that. It is in our line of goals to support Africa more, and that's in the line of goals as for the German government as well. It makes it not easier. So a lot of countries in Africa have certain issues, and it makes it a little bit more complicated. Like I said before, especially under compliance issues. So we've seen Africa, and not so much America as we would like to see, but Africa and the Near East are the mostly parts of the refinancing program we've seen so far.
All right.
As well as, sorry, just one point. As well as Russia. Russia is coming as well with some bigger issues. Yeah.
All right. Thank you very much. Follow up on that one. What is sort of the breakdown in terms of currencies? Can you shed some light on that? Is it basically euro and US dollar, or what other currencies are you seeing in the last months?
No, we've seen in the last couple of years 99% is US dollar or euro.
All right.
So it's like I said, it's other currencies are really exotic, and we got some quotations on them, but really deals made are 99% US dollar or euro.
All right. Okay. Thank you very much. So thank you very much. First of all, of course, to the two panelists, Andreas and Jörn, but also a big thank you to the team organizing this event, and also many thanks to our guests today. If you have any further questions, feel free to contact Jörn, Andreas, or myself, or your known contacts at KfW or the Hermes cover. We will be there to support you, to support your banking operations, as well as, of course, the German exporters. As Andreas already indicated, we will have the next webinar will be after a short summer break in September. There I will discuss with our distinguished colleague Markus Leichum, who's our representative, our financial expert in Singapore, recent developments, market opportunities, and the possible support that Hermes and banks can lend to exporters. So make sure that you will log on and dial in there as well. We of course hope that you're all well during these summer days. We see some light at the end of the tunnel. So therefore, we would like to underline: stay safe, stay healthy, and grab the opportunities that this upswing, which is certainly coming, is offering to our exporters community. So thank you very much from the three of us and from the whole team for the interest in this today's event. And we hope to see you very soon. And until then, have a nice afternoon. Thank you very much, and bye-bye.
Bye-bye.